I think this is a huge win for institutional investors and more of a lukewarm performance for retail investors. And what I mean by that is, if anyone knows how Wall Street works, typically these companies go out with their investment banks and they start giving a price whisper that's well below what they intend to actually list the company at. That's number one. Number two, they get the books oversubscribed at that cheap price talk, get everyone really excited about it. And then to make the company happy, you do number three, which is jack the price up right before the IPO. But here's where the magic happens for the company and for the largest investors. The largest investors get filled at the price talk of the IPO, and all of the other investors get cut back, which drives the price up when it starts to free to trade. So the reason they do that is because they allow these large investors to monetize their gains and still keep their core position, and they basically trade around that position. So from an institutional public equity investor perspective, this is a win. It priced, they made a bunch of money, they probably sold some shares, they're keeping their core position, they're still long-term positive. For retail investors who couldn't get in at the IPO price because it was oversubscribed, they basically got cut back and they had to buy more shares when it freed. So that's why it's more of a lukewarm type of reception for them.
Right.
But for the private equity guys, I mean, we were in at a fraction of the cost. So everyone's still high-fiving. This is still a home run for all of us.
Well, I mean, give us a sense of what and your investment in Lyft and what the interest has been for you from the beginning for this company.
Well, my original investment was through Queensbridge Venture Partners with Nas. We got in around $10 a share. Andreessen Horowitz have been leading the rounds and investing in the company. So just to give you perspective, there are some people who own this at 75 cents a share, at $5 a share, $10 a share, 30, 40, 50. Our job as venture capitalists is to get our investors in early, and we monetize after these companies go public. We're not necessarily trying to pick the value of the stock after it goes public. There's a lot of technical factors that play into, the value of the stock after it goes public. But all of our investors are super excited. We have, over a dozen celebrities who are texting me every moment like,
Right.
man, this was an amazing investment. We're really excited about it.